Hello guys, this is Moses Jaya. I completed this indirect methods illustration 6. This was third time myself completing. Morning I completed this. See, I doesn't have time enough to record, so I'm simply explaining the part 2 cash flow statement indirect method. See, this is the question. Illustration 6 given. This is the question. If we look, see illustration, I mean cash flow statement when it comes to indirect method, that is we start with net profit. You can see here in the problem we will start with net profit. So from here we are going to make the adjustments. See, here we can see operating expenses, depreciation is a non-cash asset, so we made adjustment, we reduced it in order to know the profit and loss according to the company's point of view perspective. But when it comes to our pocket point of view, cash and cash equivalents, we need to look in a different method. It is a non-cash, so we subtracted this as outflow when it comes to recording in the statement of financial account. But at here in cash flow statement we need to add it, so that's why at the adjustments we added 37,000. Similarly rest of the things, see what we reduced unnecessarily and what we added unnecessarily. We are going to subtract that and add that. Interest expense paid 23,000, we reduced it, so we are going to add it. You have to observe whether there is a movement of cash or not. If there is a movement of cash, that directly related to cash flow statement, and you doesn't have to make any adjustments. If there is no movement of cash and there is a change whether it may be increase or decrease, I mean addition or subtraction of the amount in the balance sheet or profit and loss account, in cash flow statement we need to either add and subtract according to the cash flow statement. So interest expense paid, we are going to, this we subtracted, we are going to adding it again. Interest income received, we are going to add, we are added, subtracted. This is gain on sale. All of these are non-cash adjustments, so we are going to subtract it 12,000, and we are going to add loss on sale of plant. So you can see here, that is what I did. So after this we are going to adding the positive balances and subtracting the negative balances from the net profit for the year. Then we will get operating profit before working capital adjustment, that is 68,000. Then in a similar process what we did, addition of changes of increase or decrease in trade receivables from the balance sheet, and changes in inventory. I explained that in the direct method, you can watch that video. Changes in inventory, increase or decreases in trade receivable, here it is increased. So you need to look into the perspective of what is the movement of cash. When it comes to increase in trade receivables, which means there is a more amount of, I am going to show here from the balance sheet that was given in the question. Trade receivables previous year is 55,000 and current year is 47,000, which means trade receivables was decreased. The reason is there is an increase in inward cash flow, inside cash came in, so we are going to add it. See, changes in inventory, while in the direct method when I was explaining purchases, I said this to you, cost of goods sold plus closing stock minus opening stock. So we are going to directly see the opening stock minus closing stock, that is inventory. So if we are purchased more amount of goods, which means there is an outflow of cash, so that we recorded here as a negative balance 34,000. So increase, next one, when you see increase in trade payables, so here you go and look there. There is a trade payables, we hasn't paid 7,000 rupees, so that is what here it was said. You can see trade payables, increase in trade payables, previous year 43,000, current year 50,000, which means we hasn't paid 7,000. 43 minus 43,000 minus 50,000 is 50,000 minus 43,000 is 7,000, which means we recorded as it was went out. We need to show it hasn't went out, so we are adding 7,000. Prepaid expenses, prepaid expenses is an asset, so present year we hasn't paid any expenses. I mean, we paid operating expenses 1 lakh. Here we can see 1,47,000, but here it is saying prepaid expenses, which means we saved 4,000, reduced 4,000 from the previous year. So which means some of the amount we used from the prepaid expenses, so that we called as no movement of cash. So we need to add, because it is a recorded. How it is recorded? It recorded like it was moved, but it hasn't moved in the operating expenses. So which was like we are enjoying the payment of previous year's benefit. Previously we booked the benefit or service or goods, etc. We booked the benefit previous year. We are enjoying that in the current year. So that is a prepaid expense. Sorry for the noise. Increase in outstanding liabilities. When you see increase in outstanding liabilities, it was 3,000. Increased outstanding liabilities 9,000 to 12,000, which means there is increased, which means there is no cash moved outward. So that's why we are added. After this, we can see operating activities after working capital adjustments, which was 56,000. After that, you can see income tax paid. See this is the income tax given in the profit and loss in the question, that was 7,000. And when you see income tax payable, that is 5,000 and 3,000, which means previous year we have a liability of 5,000. When you see that current year only 3,000 amount is we need to pay, which means this year we paid 2,000. So you need to add 5,000 minus 3,000, that is 2,000. 7,000, you need to show this as separate note under the problem, as under working notes. It doesn't have time, so roughly I did in the question itself. 7,000 plus 5,000 minus 3,000 is equal to 9,000. We need to subtract it from the operating profit. This is operating profit. I wrote operating profit activities. Actually it was operating profit after working capital adjustments. Working capital, not adjustment, working capital. So we are going to reduce the income tax from it, 9,000, that is 47,000. The rest of the things is similar. So net cash generated from operating activities is 47,000, which we can see we got that in the direct method also. Direct method and indirect method is balances are similar, but the way of projecting or showing is different. So we can see cash flow from investing activities, same: purchase of investment, sale of investment, purchase of investment, purchase of land, sale of land. If you purchase any investment, the cash flow will go out, so it shows a negative balance. When you say sell any investment, that shows positive balance, cash comes in. So after calculating adding and deduction of these, you need to also add again interest income received. We already added operating expenses, interest income received and interest income paid. At here interest expense paid, interest and also we need to show this under the cash investing activities also in the indirect method. Indirect method, I think we doesn't show not I think we don't show this under direct operating activities. We are not also showed those things like gain and so loss of sale, etc. So rest of the things, if we see, net cash used in investing activity is a negative balance 85,000, cash outflow 85,000, cash outflow. Cash from financing activities, issuance of capital, share capital 1,50,000, repayment of bonds 50,000, interest expense paid for 23,000, dividends paid for 8,000. So total is in positive balance. Net cash generated from financial activities is 69,000. If we calculate all of this, 47,000 minus 85,000 plus 69,000, that is net increase in cash and cash equivalents. Because it was showing positive balance, that why we are calling it as an increase. So it is 31,000. Cash and cash equivalents at the beginning of the year, that is, we can see at here, cash, that is 15,000. So we can see that here 15,000 beginning of the year. Now increase in cash is 31,000. At the beginning of the year we had 15,000. So total cash and cash equivalents at the end of the period, we in the hand we have 46,000. So this is a working note you need to write. This is separate from the pro forma. You don't write it here, you need to write separately. I wrote it to save the pages, but you doesn't have to write it here. You need to separate write in the separate page. Significant non-cash adjustments issued rupees 1 lakh of bonds at face value of acquisition of plant on 31st March 2001. This is the adjustment. That's it. This is the end of the video. This is the cash flow statement indirect method part 2 completed. Meet you in the next video.